Hey guys, welcome back to Money Matters Business Finances 101 here on the Manifesting Strategist. If you're new here, I am Randi Turkin. I'm the founder of I Need a Clone Consulting, where we help business owners create financial clarity through bookkeeping, CFO level advisory, and strategic consulting that helps you move from vision to execution because your numbers are always telling you a story. And if you don't know how to read that story, it becomes really hard to make confident decisions. So this month's class is a little different because instead of sharing a little bit about a lot of different areas of your finances, we're going to be focusing heavily on one thing that affects almost every business owner at some point, and that is cash flow. So we are not just talking revenue or sales, or whether money came in at all, but we're actually talking about actual cash flow. What's available, what's coming, what's leaving, and whether your business is truly supporting you the way it should. So we're also going to touch on what to do right after tax season, because now is the perfect time to reset instead of waiting until next year to look at your numbers again. So let's jump in. So how to know if your business is financially healthy. That's really what we're going to be talking about today, because sometimes a business can look successful from the outside because the clients are coming in, revenue is happening, things look busy, but behind the scenes, you're still feeling stressed every time a bill hits your account. So that disconnect usually points back to cash flow. So today I want to help you look at your business through a clearer lens and give you some simple ways to start evaluating where you really stand. So, 4 quick ways to determine whether your business is doing well financially. So, a lot of business owners ask me, am I actually doing well, or does it just feel like I am? And honestly, that is a very fair question. So here are 4 quick ways to check. First, are you consistently profitable each month? I am not talking about occasionally profitable or just during launch months. I'm talking about consistently. Second, do you have enough cash flow or enough cash to comfortably cover expenses? So I am not talking about barely scraping by or moving money around from, this account to that account and, hoping that it works and hoping that there's just enough in the account to cover the bill when it comes through. Third, are your sales steady or growing over time? So we want patterns, not random spikes that are then usually followed by panic when the money runs out. Okay. And then fourth, are you able to pay yourself regularly? Because if your business pays everyone except you, then we need to look at that. So individually, these 4 things seem simple, but together they tell a much bigger story, because I have seen businesses doing great revenue on paper, but the business owner still feels broke every month. And then I've seen smaller businesses with strong systems feel far more stable because they understand their numbers. So busy does not always mean profitable, and revenue does not always mean healthy. Your numbers tell the real story. So the cash flow mistakes that small businesses repeat every year. Well, the biggest one is that most business owners look backward. So that means they're looking at last month's revenue, last year's numbers, year-end reports. But cash flow is not just about where you have been. That does play a role, but it also is about what's coming next. So instead of asking yourself, okay, what happened? The better question is, what will my cash flow actually look like over the next 90 days? Because without that visibility, it becomes really easy to pay yourself too much during strong months, or get blindsided by tax payments, or hire based on revenue numbers instead of available cash, or make fast decisions from stress instead of intentional planning. So I do see this all the time. Someone has a really strong month and thinks, okay, great, we're good. And then 2 weeks later, payroll hits, taxes hit, subscriptions hit, and then suddenly everything feels tight. So that is not a revenue problem. That's a cash flow planning problem. So a simple place to start is this. Look at your upcoming expenses. Look at your expected income. Look at your planned payments over the next 3 months. That alone creates so much clarity because cash flow needs to be managed forward, not just reviewed after the fact. Okay? So, cash flow truths every business owner should know. If you have ever thought, we're making money, so why doesn't it feel like it? Usually, we're looking at cash flow. Again, not revenue, not sales, but cash flow. So, here are a few things to look at. Sales versus cash flow. A sale does not mean that the money is in your account yet, right? Especially if clients are paying late or if payment plans are stretched out or invoices are still sitting unpaid. What is actually draining your cash? Is it expenses? Is it slow paying clients? Is it pricing gaps? Is it overspending? Are you overspending? Are you collecting deposits or upfront payments when you should be? So that alone can change everything. Do you have a line of credit already in place before you need it? Because trying to get one while you're already panicking is not ideal. And again, are you looking ahead or only looking backward? Cash flow is the part of your business you feel day to day. It's why someone can be doing six figures and still feel anxious every single month, and why someone who is making less feels pretty calm. So if something feels off, there is usually a reason and it deserves your attention. So, how many months of cash reserves should a business have? That is a common question that I get. And you will hear people say all the time 3 to 6 months of expenses. You should have that. And yes, that is a solid starting point. But the real answer depends on your business. How consistent is your revenue? How high is your overhead? How predictable is your cash flow? If your income fluctuates month to month, you might need more than 3 to 6 months. Okay. But if your business is very stable and predictable, you may not need quite as much. So, cash reserves are not just about emergencies. They create breathing room for you, and you're going to want that breathing room as you grow because breathing room helps you make decisions without pressure. Breathing room gives you space to think clearly instead of reacting from fear. So, that is the goal. You don't want to be in survival mode. You want to be in stability and sustainability mode. Okay. When you're constantly operating for pressure, then every decision feels heavier than it needs to. And then you miss out on a lot of the fun part of owning your own business. Okay. So now I want to switch gears just a little bit and talk about 7 smart things that you can do right after tax season that's going to help you out big time for the year ahead. So your tax season should be wrapping up. Perhaps you did file an extension, and that's fine as long as you went ahead and paid your taxes already. But even if you haven't filed yet, this is a really good time to really start paying attention to your numbers. You don't want to ignore them until next year when tax season rolls around. Again, this is one of the best times to pause and reset. So here are the few smart things that you can do right after tax season. First, review your tax return. Understand where your money actually went, because a lot of people sign, submit, and never look at it again, and that is a missed opportunity. Okay. Number 2, adjust your tax savings plan and estimated payments if needed. If your AGI, adjusted gross income, changed from last year to this year, then you're going to need to adjust what you've been paying every quarter. Okay. Third, if tax prep felt messy or stressful this year, then that means that your bookkeeping system probably needs attention. So that may mean cleanup work or better monthly systems or stronger financial organization. Number 4, organize your receipts, tax forms, and financial documents now. while everything is still fresh. Fifth, identify deductions you missed so you can track them properly this year. Sixth, make a real plan to keep your books current moving forward. And number seven, meet with your accountant or bookkeeper proactively, not reactively. Tax season should be a checkpoint, not a yearly emergency. And I want to go back to number 4 that I said really quickly because it's all about organization. And really, that's what accounting is. It's really about just keeping everything organized in your financial house. Think of it like you're organizing your closet. You want to have specific, like, a shelf maybe with specific boxes for specific things. You want your top shelf to be, in a specific order so that you know exactly like what feels good, like to grab from this area or that area. And then in terms of like hanging your clothes, like, do you have it by pants and skirts and suits and, blouses? Or is everything kind of everywhere? Because if everything is everywhere, it makes things hard to find. And so you just want to think of your finances the same way as you would organizing your closet, like getting everything set in its place where it's supposed to be. Okay. So, again, tax season is not an emergency. It should not be an emergency. It should be a checkpoint for you because your numbers are talking to you all year long, not just at tax season. So you want to make sure that you are listening to what they have to say before next year forces you to. Okay. And then this is a question that keeps coming up. This one has come up a lot recently, and so I do want to touch on it. The question is, I run 2 businesses. How should I record them? Okay, this one's simple. Separate them. Easy. Separate them. Always. Okay. Because if you run more than one business, each one should have its own bank account, its own accounting system, and its own financial records. Mixing everything together might feel easier in the moment, but it creates confusion fast, especially during tax season. And trust me, you do not want to have to pay for a cleanup job to separate them because it is expensive. I've done several of them, and it is a headache for us and for you. So, yeah, just separate them now from the get-go. Because when you're trying to figure out which business is profitable, but they're both mixed together, that's impossible. It is so much more work to have to separate them later than in the beginning. Okay. Clean books create clear decisions. And clarity changes everything. Everything. Okay. So if this little class made you realize that your books need attention, there are a few ways that we can work together. If your bookkeeping is behind, messy, or unreliable, we can start there. That might look like cleanup work first, followed by monthly or quarterly bookkeeping support so that your numbers stay clean and useful moving forward. CFO level advisory, I usually only do the strategic financial oversight for clients that are already doing the bookkeeping with us because I want to truly be able to trust the numbers that I'm basing things off of. And then we also have financial foundations, which is for early stage entrepreneurs who want to understand and manage their own numbers. I can teach you exactly what we do each month for our monthly clients to keep your books clean and steady all year long. Okay. If your books are already in decent shape, but you need strategy, planning, and support with decision making, that may look more like hybrid consulting. Hybrid consulting, it's what I like to call it. It's the bridge between knowing what you want and doing what you want or doing what you need to do to get to what you want. It's the bridge. It's also a bridge between coaching and consulting. That is where I'm asking you questions and you're discovering the answer yourself, mixed with me just telling you what to do, because sometimes money does need a little bit of speed, especially if your business is in trouble. Okay. So yeah, it's a blend of consulting and coaching, and you'll get clear strategic direction on what to do next, along with real support to actually follow through. If you do want to go for the hybrid consulting, that can include not just the business finance and cash flow planning and pricing and financial statements. It can also include personal finance. It can include business operations and systems and leadership training, mindset work, and money coaching, also known as money wound healing. So one thing that's super fun right now is my monthly special that's coming up very soon, right here in May of 2026. This is going to be my featured offer. It is the Vision to Execution Accelerator. And this is a deeper one-on-one container designed for business owners who are ready to stop sitting in overwhelm and start creating real movement toward their vision, because clarity is powerful. Like knowing what you want is powerful, but execution is where everything changes, because that is what is going to get you there. So you can learn more about that this month at ineedaclone.com/monthly-special. Or if bookkeeping is the better fit, then you can book a discovery call at ineedaclone.com/get-started. I'll drop both of those links in the description here for you. But either way, whichever path you choose here, the goal is the same. It's to help you build a business that supports your life instead of one that constantly drains it. So thank you so much for being here. And if this was helpful, make sure that you like this video and subscribe to the channel. And please drop your biggest cash flow question in the comments, and I will make sure to answer it for you. Okay, thank you so much. Have a beautiful day. Bye.